Caribbean insurance conglomerate Guardian Holdings is bullish on investing in the Caribbean at this time, but Cuba isn't on the horizon, and the company explains why. I recently spoke with Guardian Holdings CEO Jeff Mack about investing in light of the fact of talk of economic reform in the communist island.
They're surely but slowly, I think, coming around to market time. Would a company like Guardian Holdings look at Cuba, which is really virgin territory in that kind?
Yeah. Well, I think you've hit on it. I think there's been talk about reforms, and I think before we would make any kind of capital investment in the country, you'd want to see those reforms actually take home and become institutionalized and have it really be a free and open market. And of course, if it reached that point, we would certainly be interested.
Jeff Mack, the CEO of Guardian Holdings, the Caribbean insurance conglomerate, also opined that in a worst-case scenario, though a downgrade of American debt would trigger global interest rate increases, it wouldn't necessarily hurt Guardian Holdings. We spoke with him against the background of Standard & Poor's recent negative outlook on America's sovereign debt.
So the way that we try and manage that situation is to try and match our assets and liabilities so that the effect on one side of the balance sheet will be offset by the other. So we believe, if something like that happens, it's not going to really be a material, believe it or not, a material effect on us as insurance companies, because there'll just be bonds out there with better yields, which is a good thing for us. And I think that's an exogenous shock, as you call it, that I think we would have no problem dealing with.
Guardian Life, which is Guardian Holdings' asset in Jamaica, had a good financial year last year, with a net profit improving by 26%, a factor the president of Guardian Life, Eric Hosin, attributed to teamwork. For Business Content Jamaica, I'm Owen James.